Hi, my name is Darren Moore and I'm Group Commercial Director at Taxist Accountants. A bit of background, Taxist Accountants are a network of accountants across the UK looking after about 77,000 clients from 300 plus locations. And my role is to support that network on a number of technical areas, including our response to COVID-19. What I want to cover today is something that's hugely topical, which are bounce back loans. And a lot of you will have seen an awful lot of media and press coverages over the last week or two on what is, we think, a really significant bit of intervention by the government to help small businesses. So I'm going to talk through a number of slides and just give you an overview of the key areas that you need to be aware of. So let's start with a bit of background. As I say, it's a new scheme that's been announced, and it's a really important scheme because previously there were loan arrangements in place, but they weren't seen to be particularly helpful for the small business market. Delays in applying, delays in the funding coming through. This is very different. This is specifically designed for that small business market. So simple, affordable, and quick turnaround of tailored loans to help small businesses, all delivered through the same accredited lenders that were there for the previous loans, and there are more and more being added all the time. Important to note that it's a business loan, not a personal loan. That's a key distinction. I'll come back to that. And the application process actually opened yesterday, so 4th of May, enormously busy, and already tens of thousands of loans being processed, we understand. So who's eligible? You have to be carrying on a business before 1st of March 2020. So you have to be trading really before that date. And it's only available to those that have been specifically impacted by COVID-19. It's not available to businesses that have been funded previously by the Coronavirus Business Interruption Loan Scheme, CBILS, as it's called. If you've already applied for that successfully, you can't use this new scheme unless your CBILS loan is under £50,000, in which case you can move across. And as we'll come on to, it might be worth you doing that because of the terms that apply to this loan. You have to be a UK business or tax resident in the UK, and you can't be in difficulty as at the 31st December 2019, and I'll come back to that. A couple of other things: more than 50% of your business income must be derived from trading. So if you're an investment activity only, you may not be eligible. And the loan must be used, as they say, for economic benefit to the business, not for personal purposes. Now that will be difficult for some, but we think there's maybe some room for manoeuvre there. So I'll come on to that as well in terms of what that might mean. So businesses in difficulty, this is really trying to look at the viability of businesses before COVID-19 started. So if you're in an insolvency process or in some form of formal winding up process, then you will not be eligible. You do need to think about it if you're a limited company or a partnership, because there are rules around losses versus your share capital or capital. Now that's probably a question for your accountant in terms of whether that applies. But they are looking for businesses that they seem to be viable, which is understandable from the bank's perspective. There are some exclusions for businesses less than 3 years old. Those rules do not apply. That's really important because businesses in early stages tend to be generating losses. So they're trying not to discriminate against those early stage businesses, which will be helpful for many. And the figures, the turnover figures that they look at and the loss figures they look at are all based on latest annual accounts. I'll come on to that later on as well. So how to apply? At the moment, it's through accredited lenders. So the British Business Bank, which has been set up to act as a central point, is a good resource. And there are 12 or 13 accredited lenders at the moment, but more being added all the time. And there's a short application process, couple of pages, some tailoring questions, some self-declarations on eligibility. We've been through it ourselves. It's 15 to 20 minutes. And the application is through lenders. And it's suggested that as a start point, you approach your current lender or provider first. That's really to keep things simple. If you're a known quantity, then some of the identity issues and other regulatory aspects that lenders need to go through won't apply in the same way if you're an existing customer. But don't worry if you're not a customer of a particular bank, or if there is no application processes yet for your bank, and they're not all on there, you can apply to other lenders. But the British Business Bank side is a good resource to look at for that. But there should be something available for everybody. The scheme is open for some time as yet, 3rd of November 2020. It's a short-term response, but that's a generous window of opportunity. So we think that's plenty for most to apply, and many will apply quickly. And the government has retained the right to extend that if they need to at a later date. In terms of amounts, anything between £2,000 and £50,000. So low level, relatively low figures for borrowing there. There is an important cap, 25% of turnover. That's going to be relevant for many smaller businesses in terms of how much they may be able to apply for. It says on the slide, no definition as yet on how turnover is measured. Actually, that is becoming clearer over time. It looks like that's based on 2019 calendar year, unless you started trading after the 1st of January 2019, in which case you have to estimate your annual turnover. The only thing to bear in mind is if you're a newer business or a very small business, that 25% cap may restrict you. That feels a little unfair, but they're the rules as they stand, and we'll see how that develops. It should be a quick process. It is designed to be accessed quickly. It is subject to assessment by the lenders, but it is a light touch approach. They've been encouraged by government to do this. So we think it will be fairly quick in terms of turnaround. And we're already seeing evidence that applications are being approved for credit pretty quickly, same day in some cases. Doesn't mean the funds are flowing through, but at least they've approved the application. The lender might ask for additional information, so just be mindful of that. They may want tax returns. If you're not a current client of that bank or lender, they may need some identity information. So just be mindful of that when you're going through the application process. But it is there and it is up and running. We'll see how the banks cope. Initial reactions, as I say, are pretty positive. People are applying and being processed quite quickly, but we'll see how volumes build up over the next few days because it is early stages and there will be a huge response to this. Some key terms, and this is really demonstrating how attractive this funding could be. So the government has fixed the terms for the banks, and they've fixed a 6-year term with, importantly, no early repayment penalties. Unlike a lot of lending, you can repay at any time through that 6-year time frame. The government will cover interest for the first 12 months, and there are no repayments at all actually for the first 12 months. So you get a whole year of cash flow benefit on this. And the interest rate, this is a real headline, fixed at 2.5%. Now, it's not clear if that's for full term, but it's certainly been quoted as being the rate of interest applied to the loans. We'll see how that works. But that's an incredibly competitive rate of interest, really attractive for many. And the lenders can't charge fees. So it really is a simple, low-cost point of access in terms of that funding. And how can you use it? That's a really key question for many. So I talked earlier about economic benefit to the business. That's what's stated, and that's something you'll be declaring if you go through and apply. So it's expected to be used in the business, so for working capital and not for personal purposes. Now, at a practical level, how does that work? So it can be used for refinancing. So that might be used for businesses. You might have some more expensive debt there. Bear in mind, you can't use it to restructure other coronavirus-related scheme debt, so the CBILS scheme, for example, as I talked about, but it can be used to restructure other debt. So that could be helpful because 2.5%, very cheap debt. So it could be used to reduce the cost of debt and to defer some cash flow in your business. And is there an opportunity for owners in terms of their own personal situation? It's trying to discourage that. But in reality, economic benefit to the business, how do we interpret that? Could it mean that, for example, if you're a company and you've got some monies due on director's loan account, could you use it perhaps to pay out monies on director's loan? Perhaps. Could it be used for companies and small company directors to pay out dividends to help them if they've got reserves but no cash? Maybe. For those that are not companies, could they use it to draw money out from their business to help them in what is a really difficult time? We don't know the answers to that. The application process talks about economic benefit, but protecting owners, protecting those businesses is around those individuals often. So we can see perhaps a case for helping individuals in difficult times. That's one for you to think about around the application process, and perhaps one to talk to your lenders about. But we can see there might be opportunity there. There is a layer of protection for borrowers as well. This is the first time we're seeing 100% government-backed guarantees for lenders. It was 80% previously. So that doesn't mean that the government will repay, but businesses are still liable for repayment. But it does protect individuals because lenders can't ask for personal guarantees. And if you're a sole trader in partnership where historically there's been an issue around personal debt and recovery, the lenders cannot specifically take recovery action over your principal private residence or your primary personal vehicle. So unusual levels of protection there, but all designed to try to encourage people to use that facility. So how do we see this? If it's delivered per the government's plans, then this could be a really valuable scheme for the small business sector and one that's much needed because they are in pain at the moment. And we think it's relevant for many out there because of the ease of access and relatively simple eligibility criteria. We'll see how the banks respond. We'll see how they cope with the volumes, but our recommendation would be to certainly look at it, to apply quickly if it's relevant to you because of the demand that's likely to be there. If you do need more help, then if you're a client of TaxSist already, please do talk to your local TaxSist accountant. They will be happy to help you and talk through their understanding of the scheme. If you're not, then similarly, you can come through our website, www.taxsist.co.uk, and we will signpost you to your right local accountant to help you. Do talk to your existing lenders or funders. They are probably best positioned to help you in the first instance. And if you need to, the British Business Bank, which I mentioned earlier, is a really useful resource. Lots of good information there that we think will help. So we think, as I say, it's an important scheme. We hope it's of help to you as well. And I hope this video has been of use to you. So please do stay safe and thank you for your time.